John Higgins, Mortgage One. Happy Monday. So last week, not a lot of data out, so the market didn't have much to trade on and very little direction. But let's take a look at where we've been because we have a really big week coming this week. So over the last couple of weeks since the first of the year, we've seen interest rates climb the mountain a bit and hit a high of 4.81%. That's some of the higher numbers the 10-year Treasury had in the last year. But we have worked our way down from there nicely. Today, we're down almost 8 basis points off some interesting news about a company in China that's come out with maybe a more efficient way of handling AI. So what does that mean for mortgage interest rates and mortgage-backed securities? This is a chart of price. So as price goes up, interest rates go down. And you can see off that nice CPI number we had a week or so ago, our mortgage-backed securities bounced up. Interest rates came down nicely, and we've kind of consolidated right here, waiting for what really is a big week coming this week. We talked about the FOMC meeting. Fed Chairman Powell took 2 of 4 rate cuts off the table for 2025 and pretty much said not to look for any interest rate cuts anytime soon. And the market is certainly buying that. There's a 2.7% probability of the Fed cutting. So near 98% of people are saying no rate cuts this month. So again, mention a big week coming up. We've got the FOMC meeting. We have GDP. So we'll get an indication on a quarterly basis of how the economy is growing. And then the Fed's favorite gauge of inflation, PCE. If we get a little tick downward on that, that could be a huge spark for the interest rate environment. We know inflation, as we've said time and time again, is the number one enemy of lower interest rates. So if we get a tick a little bit below what the market is expecting, that would be outstanding. We'll give you an update after this big news week next week. Talk to you then.